Hey traders from around the world, it's Jeremy Alexander Newsom. Hope you're doing absolutely fantastic. Let's look at the market before Thursday opens up and see kind of what I'm thinking and what could happen and what might happen. This is the DIA, which is the ETF that tracks the Dow Jones. And today and really the last few days, again, has kind of followed pretty closely what we have expected or did expect. Here's your support. Stock traded down as it was retracing. We really had a good anticipation it would roll over, potentially bounce, right? Had a lot of bullish retest gaps in there. And the last 2 or 3 days, I think, was the retest. And I do think we go a little bit higher. On Thursday, futures are up just a little bit. Relatively anticipating the market to gap up a tad tomorrow. Probably trade down just a little bit. But really, on today, I really have no idea what to think as far as the bearish argument is concerned. It just looks kind of bullish to me. Bullish to neutral. Long term, I'm still neutral. I'm not saying that the market's going to just absolutely rally from here by any means. But again, we've been mentioning for a long time, long-term trend is neutral. Buy low, sell high. Sell high, buy low. So my thoughts, really good resistance here on the Dow, which is about 167, 168. Here is another really good resistance right about here, which is about 171. So those are going to be my two main targets. And yes, could we make it back up to the highs? Yeah, theoretically we could. We could do very similar to what we did back up in here. Just kind of do it again, honestly. So that'll be interesting to see. Here's the SPY. And the SPY, really, really gorgeous candle. So the only trade that I have on the index themselves is a very neutral trade because I am very neutral. I have an iron condor, 201, 202, 179, 178. For those of you who might not be huge option traders, really what that means, and I'll try to break it down as simple as I can. I'm in a trade that will make money, about 20% return, as long as the SPY is not above 201 or not below 179 by the third Friday in March. It's a very neutral trade. So I'm saying I don't want to really go down that far, and I don't really want to go up that far. It could go up a little bit, it could go down a little bit, or it could continue to grind and go sideways as long as it doesn't really break above there. I'm basing that on the long-term moving averages that you see here in front of you, the 100 and 200 simple moving averages, that's where the bull put and bear calls is. And really, that's the most neutral trade you could have on the markets. And that is my trade. So we will see. Really, really strong resistance here on the SPY at about 195. You can see ginormous morning star reversal. If we break that, I do anticipate that we move a little bit higher, potentially all the way up to about 201. Hopefully it just happens before or after March. Third Friday in March. So that's SPY. XLE, the energy sector, had a lot of chit chat today. It is still within that little consolidation range. It still technically is in a retest formation. Here's the exponential moving averages on a weekly chart. We're still battling the 10. So far on the weekly, we do have a black candle, which is not boding very well for the bullish traders. It still does look like a retest to me. So again, you still have a lot of warning signals out there. It's going to be very, very interesting, but we are as neutral can be, I really feel like, in the overall market. Have a lot of swing trades out there. If I could break it down for most of them. Here's Bank of America. Brand new swing trade. We got triggered in that today or Wednesday. Bank of America is got triggered in bearish. So my entry was here. The trend is bearish, in my opinion. Moving averages are bearish. Stop is above the 20. And something like this could easily occur and we could get stopped out. I would lose an R. No big deal. And then hopefully, obviously, it kind of trades up in here, rolls down into our targets, and the bearish trend is my friend, so hopefully that'll work out. Another trade on the financial sector is JP Morgan got into a option trade, a 60-6250 bear call spread. So again, for my non-option traders, that's just saying, hey, if JP Morgan can stay under 60 by the third Friday in March, then I'll make about 10% return on that particular trade. Very, very good gap action. Really strong support here on JP Morgan based on this gap. Very, very bullish gap. We did kind of fill that gap and bounce a little bit on JP Morgan, so that one is kind of doing its thing. Now, hopping over to some bullish trades. Netflix, still do have a very interesting bracket trade on Netflix. If we close above 95.12, I'll be slightly more bullish than bearish on Netflix. And I was waiting for a close below 87.24 to be slightly more bearish. That did not happen. Got a put sale expiring March week 2, the second Friday in March. So I sold to open the $80 put. So as long as Netflix stays above $80, that one will expire worthless and go to option heaven. That looks like that's going to be the case. Here's Amazon. Took some AMZ and had a bracket trade on Amazon. Wanted to close below 540.95. That did not happen today. And want to close above 561.89 to be a little bit more bullish on Amazon. Brian Bodie is in a bear call spread as well. So Amazon did not close bearish, hasn't closed bullish yet. It'll be interesting to see what happens. Here's TRP. TRP, we are in a bullish trade. I looked at this one the other day. For you guys, my target's pretty far away. So this is a bullish swing trade. Limit buy was 36.13. Stop is 34.99. Target somewhere in the mid 41 range. And that'd be a really, really good win if we can get that. But that's a bullish directional swing trade. Shares or options, either one is fine. Boeing got stopped out of a Boeing trade recently, as you guys know. Was looking to maybe get back in, but I want to close below 113.50. That did not happen today, so we'll kind of reanalyze Boeing a little bit. Speaking of airlines, got a bear call spread on American Airlines. Here's kind of a drawing of what I think likely American Airlines will do. 1, 2, 3, 4, 5. Trade up into about the $42 range, and then hopefully trade sideways just a little bit. Here's the long-term moving averages on American Airlines on the daily chart. They're all clustered around $42. And then here's the weekly moving average on American Airlines is 42.87. So my bear call spread is 44.45 for March. So you got some bearish ones on there. So I have a really interesting mix of bullish trades, bearish non-directional trades, bullish non-directional trades, flat neutral trades, iron condors. So a lot of options, a lot of spreads, a lot of optionable trades. Yes, I do agree. Had some fantastic day trading opportunities today. Shout outs to everyone who destroyed this gap. And that's a lot of shout outs. Ticker symbol CAR, phenomenal to all those who got a chance to play it. The list is almost too long to name. You know who you are. If you got a chance to play this one, this was almost too easy. So easy, in fact, that I actually did not get a chance to trade this one. I missed this one myself. I feel like I was a sad panda. But this is the setup. This is the bread and butter. Gorgeous gap. 5-minute candle is white. Boom, by boom, by boom. Awesome trade. I mean, some traders locking in 3, 4R on that, 2R, 3R. Really great gap on that one. For some reason, I ended up pilling around with this one for about 1.8 or 1.9 or so. Still was good. Diacom, here was the daily chart on it. Diacom had some white candles, gapped down this morning, so it was trapping anyone who bought in there. It was gapping right about there. On the 1-minute chart on ticker symbol DY, this is what I was looking at the 1 minute earlier this morning. Kind of zoom over here. And this is one of my favorite candlestick patterns. Almost a perfect tweezer top, one black crow kind of pattern. So boom, boom. Target was 53.85, I believe. So right about there for about 1.8-ish or so. I didn't get the best fill that I wanted to in the entry. But regardless, a profitable day overall on DY, just in and out, done before noon. That was a beautiful day. So a lot of traders had some really good moves this morning. Even though the market did gap down very strongly this morning, we talked about the other day, if the market gapped down, it would likely be fierce selling in the morning and then likely some buying opportunities later in the afternoon, and that is exactly what happened. So from here on out, will be interesting to see what happens, ladies and gentlemen. Trade your plan, mitigate risk, and until our next real life stock review, love life, live life, and trade. See you.